Yachts and boats, commercial marine, high-performance boats. Yep, we've gone boating. Arrowhead Marine Insurance, available coast to coast.
Peter Hancock was named CEO of Chartis, AIG's global property and casualty business, in March 2011 when it was reorganized. Hancock, who joined AIG in 2010, has spent his entire career in financial services, including 20 years at JP Morgan. In his keynote speech at the recent Professional Liability Underwriting Society meeting in New York, and in this interview with Insurance Journal's Andy Simpson, Hancock discussed how he thinks fear is a major part in today's global economy, his own fear that globalization could be turned back in today's environment, and why he thinks another financial crisis is coming.
Well, I think fear is a natural human emotion and gets inflamed by radical change, and the 2008 financial crisis created a lot of change. And if you compound that with the changing balance of power in the global economy, with the rise of China and others, it creates a lot of fear. And the question is, what does the world do in response? And whether that's an individual homeowner wondering whether they should buy a new house or a starting home out of fear that the house price may go down, or whether it's a company fearing to invest in growth out of an uncertainty as to the tax regime, an uncertainty on the currency regime, or even the existence of the Eurozone itself. So there's a lot of uncertainty in the world, always has been. How people respond to that uncertainty, whether it's in a constructive way, seeing it as a chance for innovation, or in a defensive way and a chance of retreat, is, I think, what's at stake. And insurance, I believe, is a wonderful mitigant to fear. And that's why I think we can serve a very helpful role in putting the economy back on track. And so that's my reason for getting at this issue of fear and its impact on the global economy. Globalization is narrowly important to us. So let me state my self-interested reason for caring about it. Chartis is a very global company. We operate in 90 countries. We have done for our entire existence, or at least operated internationally for our entire existence. More than half our business is outside of the United States. But that's just a narrow Chartis perspective. From a global society perspective, a very interesting statistic, I think, is that the global population grew between 1970 and 2006 by over 80%. And in that same period of time, the number of people in poverty, as defined by the Millennium Development Goals, dropped by over 60%. And I believe that reduction in poverty owes a lot to globalization. And lest those of you who feel that that's entirely a China phenomenon, that reduction in poverty was over 80% in China, was over 39% in the Middle East, over 70% in Latin America, and even in Africa it was over 20%. So there's a worldwide benefit that's very broadly spread from globalization, and we take for granted that that process of globalization that's occurred over the last 60 years will continue. There are political forces that would potentially reverse that, and I think that would be a very unfortunate consequence of some of the more recent events in the financial sector. I think that inequality has clearly become a very political issue in developed economies, and there's no arguing with the fact that it has increased. It needs to be weighed against the positive benefits on billions of people around the world, and we need to think of intelligent ways to mitigate the negative consequences of that inequality. And I think investing in education and many other ways to deal with that are important ways we can get the benefit while mitigating the negative consequences. As I mentioned earlier, there's a lot of innovation and change in the way the economy operates. a lot of winners and losers, and that will create instability. And you overlay on that the level of leverage that exists in the banking sector and in the sovereign governments that often back the banking sector, and we have a fairly precarious situation. So I think the tolerance for those financial institutions for further shocks is not that great, which is why I believe the delevering of banks pushed by regulators is a healthy thing in the long run. So I believe that as banks delever, insurance companies can be recipients of some of their assets, which is, I think, a way, again, insurance can help in the repairing of confidence in long-term asset prices. So I think that the 2008 crisis revealed a lot of fragility in the governance of companies. It revealed fragility in the regulatory framework. And while some improvements have been made, some of the more fundamental drivers of that fragility, I think, are here and probably here forever.